Welcome back to the Simplify Senior Transitions podcast. I'm Dale Corpus, a senior transition specialist and real estate expert, and I help families navigate the overwhelming process of selling a senior's home while transitioning them into the right living environment. Today, we're diving into a financial tool that's often misunderstood: reverse mortgages. Many seniors own their homes outright, but are struggling with cash flow. A reverse mortgage allows them to access their home's equity without selling. But is it the right option for everyone? That's why I have Chris Pyro with me today. Chris is the president and broker of Searchlight Lending, and he's an expert in all types of real estate loans, including reverse mortgages. With over 17 years in the lending industry and more than $1 billion in loans funded, he knows exactly how these loans work and how they can benefit seniors. Today, we're going to cover 1, what a reverse mortgage is and how it works; 2, who should and shouldn't consider getting one; 3, the biggest myths and misconceptions; and 4, how it ties into senior transitions and real estate decisions, and some fun rapid fire questions at the end. If you're a homeowner or have a senior loved one who's curious about reverse mortgages, this episode is for you. Let's get started.
Welcome to the Simplify Senior Transitions podcast, where we help families navigate senior living, real estate, and everything in between. Hosted by Senior Transition Specialist Dale Corpus, this show brings you expert insights, real solutions, and stress-free strategies to make senior transitions simple. Ready to dive in? Let's go.
And now we are back. Let's just jump right into this. Chris, welcome to the podcast. How are you?
Amazing. Happy Friday. How are you?
Happy Friday. I'm excellent. Let's just get into the nitty-gritty. Can you start by explaining what a reverse mortgage is and how it works?
The reverse mortgage is a government-backed loan. So it is actually an FHA loan. So it's not some tricky, negative amortization or some term you've heard of. And I know we're going to go over some negative connotations on the reverse mortgage that have come up over the years. But reverse mortgage is FHA, HUD-backed, government insured, a conventional loan. What it does is it allows seniors, there's different age ranges depending on the loan type, but usually in general, 62 years of age and over, to use their equity in their primary residence so they can live out their years or use their equity in different ways. And they don't have to pass away with struggling and not be able to make their payments, etc., and let them live in their house until they, are no longer alive.
Okay, good stuff. And does it work for all types of properties that seniors own?
It works for single family homes. We can also do duplexes as long as the person occupies the property. But the really big thing on this loan is it's only for primary residence. So it's that, which means it's the home that the person lives in. If they do move out, then the loan may be called due. So they do have to live in that home.
Okay.
That's the big point.
Okay. Many people confuse a reverse mortgage with a traditional mortgage or home equity loan. What makes it different?
The reverse mortgage allows the borrower or the person living in the home to not have to make loan payments. So if they can make the loan payment, and if they make their loan payment every month, the balance will stay the same. If they do not make their payment or make less than the payment for the interest accrued every month, then it's tacked on or added to the principal or the mortgage balance. So it gives them the option or flexibility to have more monthly cash flow by not paying their principal and interest every month.
Okay. Who is eligible for a reverse mortgage, and what are the basic requirements? I do remember you saying that it does need to be a primary residence. That's one of them. What else?
So primary residence, usually 62 and over. There are some loan programs that are 59 and a half and over. And other than that, the property can't be in too much repair. A lot of times, a little more particular on the property. So, for example, I had one where the deck was falling down, the stairs weren't usable, and we had to fix it prior to close. So we do look at some more items like that. But other than that, we just look at 4 items, pretty easy: date of birth, zip code, because that gauges or puts into the box of what the loan amount can be, the max loan amount, what the current mortgage balance is, and what the property is worth.
Okay. Let's switch gears a little bit. What the different types of reverse mortgages are. So, what are the different types of reverse mortgages available today?
So the main two groups in the reverse mortgage space, so sort of the conventional loan. So conventional loan, just like a Fannie Mae, Freddie Mac loan you might have heard of. This is an FHA loan backed by the government, insured. So the loan limit right now is around 1.2 million in certain counties. And let me cut this out because I just wiped out. So it's four main types of reverse mortgage. There's conventional reverse mortgage, which maxes out 1.2 million. There is purchase money reverse mortgage. You have to use reverse mortgage to purchase a home. So let's say a borrower, a client wants to downsize. They sell their $2 million property. They pull their equity out upon sale, and then they can go use a down payment. Let's say they buy a $1.2 million property, and they can use their equity in the other property to get a reverse mortgage and never make a payment on the property they're purchasing. There's also jumbo reverse mortgage. So if the loan amount is higher, we can do jumbo reverse. And then we also offer second mortgage reverse. So if you do have a low interest rate first mortgage, you don't want to get rid of it, and you do want to use your equity, we can go in second position, not have to make payments on it, pull cash out, and then keep your first mortgage, and you'll have a second mortgage reverse.
Got it. So I want to just clarify something with you. So the FHA types of government-backed reverse mortgages, those are also called HECMs, right?
Yeah. So there's HECMs, which are so there's two types of, back to the conventional bucket. There's a lump sum or a fixed rate mortgage. So, for example, you do a reverse mortgage, they give you a lump sum of money one time, and the rate's fixed for life alone. The other type is a line of credit or revolving line. You can always think of it like a credit card or an equity line. And you don't have to use all the funds day one. There's a line of credit, so you can use it at will. Let's say you want to fix the house up or go on vacation or whatnot. You use it, and then you're only paying the interest on the portion used. A lot of borrowers choose this option because the line amount will actually increase over the life of the loan, tied to inflation and property values. So a lot of people, if they don't need all the money day one, like I said, they like the line of credit because then they're not accruing interest on funds not used.
Okay. And then one of the types of reverse mortgages out there, I know it's like a proprietary or like a jumbo reverse mortgage. How is like a jumbo reverse mortgage different from a HECM?
So jumbo reverse mortgage just means it doesn't fit in the conventional loan limits, which are about 1.2 million right now. So if the person, for example, let's say they owe 1.5 million on their home, but their home is worth $6 million, which happens in California and, high net worth areas, they can still do a reverse mortgage, but it is still insured product, but it's not insured by the government. So it is a portfolio loan or a bank loan, but it's not by definition an FHA HUD loan, but we do offer that as well.
Okay. And related to seniors that want to age in place, or in other words, not move into an assisted living community and stay at home and age in place at home, what type of reverse mortgage would be best for that situation?
It really depends, because I've had different cases, right? So I've had people that have had medical bills that they cover that are quite substantial, and they do need the lump sum to cover the medical bills. They don't want to go to collections, et cetera, et cetera. So, I always say reverse mortgage is the right loan for the right person at the right time. It's not for everyone. But yeah, if you want an example of staying in your home, getting care, not going into a senior care home. So one of these reverse mortgages that I did, the person wanted care in-home, which, as we know, is not cheap. They wanted to live out their years in the comfort of the home they know. So they did the line of credit option, and I think, care at home, you might know better, is $5,000, $6,000, $7,000, $8,000 a month. So
Mhm.
they're in nursing care, and they just use the line of credit to pay that monthly amount during their in-home care.
Okay. Very good. Um, I know that I've heard that living trusts are important when it comes to reverse mortgages. So I wanted to talk a little bit about that. Why is it important to have a living trust when obtaining a reverse mortgage?
Yeah, this is a very important point. I run through this all the time, both on reverse mortgages and conventional regular mortgages. And going through this and seeing that pain my clients go through, I got mine done instantly, because if you're a property owner of any kind of assets or wealth or real estate, without a living trust, I think you'll probate another podcast. But reverse mortgages have a connotation where the bank steals your home or the state steals your home. Um, it doesn't, right? So living trust, it's very important, because if you don't have that in place, and when you pass away for a reverse mortgage, the state may get your property. So of course you don't want that, right? That your beneficiaries, your kids may have to go through probate, which is a long and costly process. The other reason is, if you do become incapacitated in any way, power of attorney, dementia, these things happen, right? So if this happens, you're not able to legally sign documents. So I had a case where the person did not have a living trust in place. They had dementia, and we had to get a doctor involved, multiple doctors actually. We had to get an attorney involved. We had to get a judge's court order to be able to get the reverse mortgage. So this person needed the money. They needed it for medical care, and they could not get it in the timely manner they wanted to, because they had to put all these legal items into effect. And if you can't pull a pen and sign a loan document, you need a power of attorney. And that's what actually happens. You cannot physically sign paperwork. And it took probably 6 to 8 months to go through this loan, while her kids, in the meantime, were fronting her to pay for her income care.
Got it. I had a follow-up question, and it's related to this, and I think you touched on it a little bit. So what again happens if a homeowner has a reverse mortgage but passes away without a trust?
Yeah, so really it's the same as any loan. So this is a good topic, right? What happens when the person passes? Who gets the property? Who gets the equity, right? So number one, it's the same as any mortgage. So let's use an example. The home is worth $1 million. They pass away, and there's $500,000 put on the property. Where does the $500,000 remaining equity go? So it goes whoever in the living trust, beneficiaries, etc. Whoever the beneficiaries are on the trust, they have 12 months to either refinance that property into a conventional mortgage or any type of loan that's in reverse, or sell the property, liquidate the property, and they get their funds. I think you have one more question on that.
I think that was good. No, that was pretty much everything on that. So last question related to living trusts. In this topic, what steps should homeowners take before applying for a reverse mortgage to ensure they're legally and financially prepared?
So, yeah, as far as the reforms goes, and we touch base on living trust, right? You should do that definitely prior to reverse mortgage. That way, it makes just everything easier as far as knowing the property is going, knowing the equity is going, etc. Other than that, really, it's a pretty simple process. You do touch base on this. You do still have to pay your taxes and insurance during a reverse mortgage. That does not come out of the proceeds of a reverse mortgage. I don't want to get into the weeds here, but there's a thing called a LISA, which is a insurance and tax holdback. It's an escrow holdback. And that's usually only in the case where the person does not have the fixed income to cover their taxes and insurance. So most people of this age have Social Security, pension, some kind of income. So if you don't have enough income to cover your taxes and insurance, you may have an escrow holdback. But other than that, I mean, it's not credit based. I've done loans where the person's currently late on their mortgage. I've had people have 480 FICO. It's not credit based. It's just equity based. So that's a big misnomer as well, that, oh, I have bad credit, I can't get a reverse mortgage, I'm behind on my payments. That's actually, it's another reason you may need a reverse mortgage, because if you don't make your payments, the bank's gonna foreclose on your home and you're gonna lose your home anyway, right? So I've done pre-foreclosure reverse mortgages to help people save their home that were making payments or were able to make their payments on their fixed income.
Oh, wow. Let's pivot a little bit to the pros and cons of reverse mortgages. First question, what are the biggest benefits of a reverse mortgage for seniors?
It goes back to, I always use this line, and I'll probably say 2 more times, but right loan for the right person at the right time. So if you say the benefits, I like to go over case studies or examples, right? So the person that is on fixed income and is eating ramen every month because they can't afford to go out to eat, to live. Inflation is going up, things are more expensive, and they're on fixed income. Their Social Security pension is not rising with inflation. They want to live out their years comfortably, go on vacation, go on a cruise, whatever, right? So they want to use the equity while they're alive and not pass it on. So that's a big benefit. The other one we touch base on is in-home care, or medical care that they need to pay for. So it's really using your equity in a way that makes your life more comfortable during the time you're alive. So that's the benefit, right? It's using that equity to help your life be better.
Okay. Let's talk about some of the, risks and downsides, some of the cons. So what are the risks and downsides that people should be aware of?
Yeah. I mean, there are costs with everything in life. So I like to say there is a connotation with reverse mortgage where the bank steals your home or the state steals your home. That's not true. A lot of big banks did get out of reverse mortgages, the big Wells and JP Morgan and all of them, because there is the bad connotation for closing on the elderly, all of this. There is no, even if the principal balance goes above what the property is worth, they won't foreclose on the property. They won't take the property, the bank that is. So that will not happen. There is mortgage insurance on these loans, as stated they are FHA loans. So even if the property goes by definition upside down with, it's owed more than it's worth, it's still an active loan. So that won't get called due. The downsides are, they're a little more expensive than conventional mortgages. Let's say today, and it's March 2025. Rates are around 7% for conventional. A reverse mortgage on a adjustable is around 8%, and a fixed reverse mortgage is around 9%. So they are more expensive. Being that conventional stated is there to protect the homeowner from any foreclosure or anything like that. But that being said, it's this loan, so there is more to put on this loan. So it's not cheap, but it is worthwhile in the right situations.
Okay. How does a reverse mortgage impact a senior's ability to leave their home to their heirs?
Yeah, I just had a talk with my friend yesterday. That's father, 88 years old, and same kind of situation, fixed income. The son's actually kind of giving the dad an allowance monthly because he just can't afford to live. So the first question from the son is, well, what happens to the equity, right? And it's not about being greedy. It's about making sure what the father worked for and the family worked for years, and the generational wealth is passed down, right? So it's the same as a conventional loan. So when and if the borrower passes, whatever equity is remaining, so if the principal balance increases over the life of the loan, it eats into a little bit of the equity. But when it comes down to it, whatever the delta is, the difference between the home value upon sale, let's use the sale as an example. We sell the home minus whatever the current reverse mortgage balance is, will go to whoever's in the living trust or beneficiaries. So that's passed right on. Nothing goes to the bank. Nothing goes, I'm not a CPA. So as far as capital gains and and pass over capital gains. I'm not touching base on that, but whatever that equity amount that's left will go to the beneficiaries.
Okay, got it. Let's debunk some myths about reverse mortgages.
And
There are a lot of misconceptions about reverse mortgages. What's the biggest myth you hear, and what's the truth?
yeah, I mean, the biggest thing is the bank's going to take your property, and that's not true, right? So it's the same as a regular mortgage. If your parents have a conventional mortgage and there's a loan balance on it, then you sell the property upon their passing, you'll get the equity. So that's not the case. It's really going back to living trust. If that's not in place, it will go into probate just the same as a conventional loan. So that is not true. And that's always the first question I get is, does the bank take my parents' property? And it's a loan. It just gives you the option of not having to pay rate.
Well, here's another question I have on the same topic. Well, what happens if a senior lives longer than expected? Can they run out of money?
They can always run out of money, right? So I always say, and I have this talk with my clients, don't use all the money at once, right? Because if you get a reverse mortgage, especially the lump sum, that's it. It's a one-time amount. As long as you pay your taxes and insurance, they will, the government always wants their money first. As long as you pay your taxes and insurance, they won't have any chance of foreclosure or losing their home. On the line of credit option, the line of credit does increase, so they can annually get more money. But I definitely say to my borrowers, don't go buy a Ferrari or put that addition on your house. Like, save the money, allocate it, because it is kind of a one-time thing. You can always refinance a reverse mortgage, but that's only if and when loan limits increase or your value goes up substantially. So yeah, definitely you want to budget the money. I usually have people talk to a financial advisor, and that way they can, if they need the lump sum, maybe they put into an investment tool that will generate some kind of residual income or interest. And that way they can at least gain some, keep their money active. But back to the mortgage insurance piece. So let's say they live to 120 years old and the property value stays the same, but the principal balance keeps on increasing. Then due to the mortgage insurance that's put onto the loan, they don't have to be worried about, foreclosure, about increasing payments, anything like that. So that is put in the calculation for the borrowers, and they are protected with the mortgage insurance.
Does a reverse mortgage affect a senior's Social Security or Medicare benefits?
It does not. As far as Social Security goes, you also get paid the same Social Security. As far as Medicare goes, honestly, I do not know the answer, so I don't want to say anything on a televised podcast that can give you in hot water. I'm not sure. I mean, it's not income, right? It's equity. Yeah. So I'm pretty darn sure that it cannot affect Medicare.
Okay. Let's transition a little bit into how reverse mortgages tie into, senior transitions and real estate. For families considering selling a senior's home, is a reverse mortgage even a better alternative to selling?
Back to that's a really good question, but it's back to the right loan, right place, right time. If they want to live in their home, right? So a lot of people, I mean, I'm not saying anything about assisted living homes. They offer great care, but a lot of people do want to live in their homes. They're comfortable in their own beds. They're comfortable with their TV and their kitchen, the way it is, right? They've been in their home 30, 40, 60 years. I mean, the person I'm working with right now has been in their home since 1960. They raised their kids there. Their husband was there. They're widowed now. They want to live in their home. So it's really, if you don't want to move out, then it's the perfect option. Some people don't have the option, right? They need maybe more intense medical care, but a lot of people do want to live in their home, through their golden years, so to say.
Okay. One of the types of reverse mortgage you mentioned was that how it could be used even to purchase a home, which I think most people don't realize. Have you ever seen anybody even do that in the Bay Area by chance?
I haven't been actually, and a lot of realtors I talk to when I do a presentation or talk to realtors one-on-one don't know this either. And it's really, I think it's not downsizing, it's right sizing they call it, or I know there's a different term realtors use, but for example, I had a person, maybe they have a 5-bedroom house, they have 4 kids, it's a lot of upkeep, a lot of maintenance, they don't need that much, right? So maybe they move into a 2-bedroom townhome, and the value's 1.2 million, for example. They move out of their $3 million house in Lafayette. They're like, okay, there's too much upkeep. And I know there's also, you can pass on the property tax to new property as well. But yeah. So I like to use examples. You sell a $3 million house, it has $2 million equity. You go put 100% down payment on the new property and you have no cash left, right? So you're like, that doesn't help the situation. I have no money now. So you can actually put the money down on the new property that they're purchasing, and then get a reverse mortgage concurrently, and then get that, several $100,000 to live off. So you can use it as a down payment to keep your cash, or you can even buy that house all cash and then do a delayed financing, reverse mortgage after the purchase, if you want to be more competitive with like an all cash offer or something like that. So you can go both ways.
Okay. What should families consider before deciding whether to sell a senior's home or get a reverse mortgage?
Kind of touch base on this is the fact that reverse mortgages aren't cheap. For example, you may have $30,000, $40,000, $50,000 in, mortgage insurance, which of course you need, is worth it. It protects the property. But if the person might pass in a year or two, it might not be worth getting because of the costs. You're not going to be able to recoup those costs. Yeah, it's really, so when it comes down to it, Dale, it really comes down to if the person's not going to live in the property that much longer, maybe they will move into assisted living. As stated, if they do move out, they only have 12 months. The kin or the borrower has 12 months to take the loan out. So if they are planning on moving out, if they're planning on moving to Portugal, if they're planning on not living that much longer, it might not be worth the reverse mortgage because of the fixed upfront cost of the reverse mortgage.
Okay. Good stuff. Good stuff. All right. Enough about all this reverse mortgage talk. I want to ask you some stuff that I want to know about. I know you've been in the lending industry for over 20 years. What's the wildest or most unique loan situation you've worked on?
Oh man, there's quite the gamut here. I mean, I worked on everything from a street sweeper to a barge for the SF Bay. I've worked on multiple gentlemen's clubs. I don't know if I'll cut this out. I did a loan for 220 Jones Street, and for who knows that, it's a place called the Power Exchange. So we had, I didn't go with the lender, I had to do a site visit.
Yeah.
But that was an interesting one. It was actually a REIT, so it was a big fund that funded that one. But what I really am interested in, or like to get into myself right now in this business after 22 years, is the bigger construction projects, ground up construction. We land loans through entitlement, through hundreds of units. I love doing. We worked on a hotel in Cabo with this guy, Kenny Chesney. It was a Cabo Wabo hotel. So we syndicated that deal. And back to assisted living care homes. We've done a $22 million ground up construction project in California, and we can do SBA on those. So we did SBA loan for 80 plus bed assisted living care home in California. And this is not just refinance or purchase. I mean, this was ground up, straight dirt, from A to Z. So construction is our forte, and those interest me the most.
Good. If you had to explain reverse mortgages in just 3 words, what would they be?
No more payments. Yeah, I mean, the whole thing was using your equity and then having monthly cash flow to once again live out your years comfortably.
Love it. If you weren't in the lending business, what would you be doing instead?
Oh man, I'd probably run through the wood naked and eating berries at this point. No, I'm a really outdoorsy guy. It would be kind of funny for someone that's just probably computer all day. As far as, I guess, occupation or career, cooking's my passion. I love, I opened a restaurant for some reason, and thank God sold it. And you know, but I still love cooking. After a 12-hour, 14-hour day of work, my favorite thing to do is have a glass of wine and make the family dinner. It's just my zen. Put on a record. So any kind of food I love cooking, whatever the kids want, cooking for friends and family is, that's how I show love, is through my food.
Love it. If you could give one piece of financial advice to every senior homeowner, what would it be? So,
Yeah, I mean, if I could give an elderly person one piece of advice, and let's use an instance, they want to stay in their home, I would say, of course, pay your taxes and insurance. Right, the government has to get paid first. If you don't pay your taxes and insurance, the government doesn't care. That they're not as nice as you may think, and they will take your property. So, reverse mortgage may be a good option if you're way behind on your taxes and insurance, where you have the equity. I see this a lot of times where maybe the breadwinner or the person that does the finances, whether it's the wife or husband, passes and bills fall behind, credit cards get lost, payments, tax and insurance don't get covered, and that could put the person in a really bad spot. As we know, I mean, taxes can just increase quickly. If you're late on your property taxes, it's 10% day one. So just keep up on your tax and insurance, and then you look at your options, whether reverse mortgage is fit for you.
okay, got it. Excellent. I think that's solid advice. I know we covered a ton already in this podcast. It was amazing, but I still want to double check. Is there anything I didn't ask you yet that I should have asked?
Yeah, I mean, I like to go over the process, because let's say you want to get going, and a lot of people, when they need it, it may be too late or they're not ready, right? So we do look at income. So most people are fixed income. You do have to be able to cover your taxes and insurance. So have that ready. We do look at credit. Once again, it's not credit based, but if you have collections, liens, taxes owed, medical bills, etc., we will have to pay those off if there are potential liens on the property. And then as far as the process goes, it is not as fast as conventional mortgage. You do have to do credit counseling prior. This is, you do it all over the phone. It's a half hour to an hour. And this is just to make sure you have a third party professional to answer all your questions regarding reverse mortgage. They make sure you understand the pros and cons, kind of like we went over today. And then after that, you get a reverse mortgage certificate. We cannot start the process until 7 days after their certificate is issued. And then the total time is about usually 30 or 40 days on reverse mortgage. So there is an appraisal done. The property does have to be in decent condition. So if there is peeling paint, broken windows, broken stairs, any health or safety issues, those will have to be taken care of prior to our closing. So just keep that in mind. And I've helped borrowers bring a contractor to their house to fix stairs prior to the loan being done. So just make sure all your ducks are in a row. And, that's what we're here for, is to hold your hand through the process.
Awesome. This was an amazing conversation. Yeah, thanks again. Very insightful. Thanks, Chris, for breaking down reverse mortgages and explaining how they can be a powerful financial tool for seniors. Before we officially wrap up, how can families reach out to you if they have questions or want to see if a reverse mortgage is right for them?
Yeah. So best contact information, my cell phone is always on, 650-773-1866. My company is Searchlight Lending. You can look me up on searchlightlending.com. And my email address is chris@searchlightlending.com. If you're interested in a reverse mortgage, we just need a small piece of information: date of birth, zip code, what the property estimate value is, and what you currently own the property. We can get out multiple proposals. As noted, we offer multiple kinds of reverse mortgage. Usually offer about 4 options. And a lot of times with these, because it is the big decision, is a big family decision, people like to meet in person. They like look at the numbers, get the highlighter around, look at the pen out, ask the questions. So I'd probably say more than any type of loan I do, the families involved, and people like to meet in person. So I've had attorneys being involved, CPAs, financial advisors, and of course, beneficiaries, kids. So there's a lot to go into this and into the big decision. So I'm happy to meet with all parties, as long as the borrower approves, to make sure this is the right financial decision for the borrower.
Perfect. Oh, and where are you located in the Bay Area?
So I'm in the South Bay Area, but I cover the whole Bay Area. We can do reverse mortgages in 17 states, and the states are on our website. But yeah, I'm in the South Bay Area, kind of in the Santa Cruz area, but we have an office in Los Gatos. I'm happy to drive anywhere within reason to meet with the borrower and go over to see person.
Okay, awesome. And so lastly, for those of you watching, if your loved one is considering a reverse mortgage or selling their home as part of this a senior transition, let's talk. Schedule a free consultation with me, even using the Calendly link in the description box of this video. If you're watching this on YouTube, you can also learn about my own services at www.simplifyseniortransitions.com. If you have a quick question, feel free to DM me on Instagram at soldbydale. And if you found this interview helpful, please make sure to like, subscribe, and share the video with someone who might need this information. Thanks for tuning in. Thank you, Chris, for being here. And I'll see you on the next episode of the Simplify Senior Transitions podcast. Thanks, Chris.
Thank you, Dale.